This is Alan Farley from FX Empire. Kroger reports earnings on Friday morning. Taking a look back, this big supermarket chain traded up to the mid 40s back in December of 2015 and entered a very steep decline that cut the stock price in half by the second and third quarters of 2017. Now it did this nice little double bottom pattern into 2019, started to recover, spiking back up to the prior high at the start of 2020. Pandemic then came along, it gave up those earnings, came back into this little base, started this long recovery process that returned to the prior high in August, completing this multi-year cup and handle pattern. Now the stock broke out heading into this month, added about, about 6 points, hitting an all-time high last week and pulling back just a little bit. Now, the chart is firing on all cylinders. We have monthly stochastics coming up to the oversold level, the overbought level, but it's still sort of stretching higher. So that's not really bearish. On balance, volume looks good, heading up on the daily chart to an all-time high. So it's all clear blue skies. However, Kroger's growth has been slowing in 2021 after a big sales spurt in 2020 when Americans were stockpiling food and supplies. We also have commodity inflation eating into profits. They've been able to compensate well by raising prices. However, the stock has gained 24% since the last earnings report. It's now trading within 2 points of the highest Wall Street target. So I think even though we have blue skies, I think this favors a short sale over buying for any sort of miss or even inline earnings later this week. Now you do have to watch out. The stock pays a 21-cent per share dividend, and the trader is on the hook for that dividend if they short the stock. But it's very difficult to buy this, even with this gorgeous pattern, until we work off some of this overbought condition and some of this a little too much enthusiasm.